Hello traders, you are welcome to this video and I specially welcome you back to the Forex Geek channel. Are you tired of getting stuck in consolidating markets? You enter a trade, price barely moves, and before you know it, you are either stopped out or wasting hours watching the market go nowhere. Well, if that sounds familiar, then this video is for you, okay? In this video, I'm going to be showing you how to avoid consolidating markets and improve your rate of success with smart trading strategies. Stay tuned because this will completely change the way you trade. All right. First of all, let us talk about what a consolidating market actually is. All right. Now, a consolidation is when price moves sideways. Okay. When price moves sideways, we call that a consolidation. Can you see what was happening around here? Okay, within a tight range, showing no clear trend. You'll see a small choppy, you're going to see small choppy candles, low volatility, no real volume. So now, why is this a problem? Simple, no trend equal to no real trade opportunity. Now, most traders end up getting faked out, taking premature entries, or getting stuck in low volume conditions where price barely moves. So instead of wasting time and money, you need to learn how to avoid these traps. All right. So how do you identify consolidation before entering a trade? Here's what to look for. First of all, you have to identify a tight sideways movement with small candles, something like this. If price is ranging in a small box with no clear direction, it's a red flag. Secondly, you can use your volumes indicator to check this out. If you have low volume, you can see that we had low volume around here. If we have low volume and weak momentum, you can check your volume indicators. Low volume usually means indecision. All right. So when you notice low volume, I just want to stay out of the market. Okay. And then when you have multiple fake breakouts, if price keeps breaking a level but fails to follow through, it's likely a trap. So instead of trading blindly, you need to check for these signs before you enter the trade. Okay. If you see them, it's time to be patient or shift your focus to another currency pair with better movement. All right. Now let us talk about some indicators that help you filter out consolidating markets. I'm going to start with the moving averages. All right. We are going to be using the 50 EMA and the 200 EMA. All right. So when price is stuck between these moving averages with no clear direction, the market is likely consolidating. You can see here again, we had a consolidation period here again. All right. So the next indicator we are going to be checking is the ADX, the average directional index. All right. If the ADX is below 20, right, if the ADX is below 20, it signals a weak trend, meaning that consolidation is more likely. And you can see that's what happened here. You can see this period, right? Consolidation took place. All right. At this point, the ADX was actually close to 20, but it was not below it. But here it was actually below it from this point up to this point. All right. Then the next indicator we are going to be looking at is the Bollinger Bands. The Bollinger Bands. When the bands contract, you can see we had contraction here, we had contraction here. When the band contracts and stays narrow, it means that volatility is low and the price is in a range. So you want to wait for expansion. You want to wait for an expansion of the Bollinger Bands, before you trade. So now when you combine these indicators with price action, you can use that to confirm whether the market is trending or stuck in consolidation. Now that you know how to spot and avoid consolidation, let us focus on how to improve your rate of success. Instead of taking random trades, just follow these steps. All right, first of all, identify strong trends. All right, the first thing that you should do is to identify strong trends. Look for a clear uptrend or a clear downtrend. All right, meaning you should look for where price is forming higher highs and higher lows, which is going to be for an uptrend, clear higher highs and higher lows, or clear lower highs and lower lows, which is going to be a downtrend. Okay, make sure that your trend is clearly identified. Okay, then after you've identified the trend, you can wait for a breakout and a retest. All right, instead of trading inside the range, you can wait for a confirmed breakout and retest before entering. Okay, now it's important for you to know that fake outs do happen sometimes. For example, we can see what happened here. You can see that this was a fake out. It was as if price broke out of this consolidation, but before you know it, the price went back into the consolidation. Do you see that it was just a fake out that divided this consolidation into two? Because the consolidation continued, it was consolidating and then we had a fake out, and then consolidation continued. In fact, it even continued all the way to this point. Can you see that consolidation continued until we finally had a brief, I'm just going to call it a brief breakout, because in as much as this was kind of a legit breakout though, but it was just a brief one because the trend did not last for long. Can you see? The trend did not last for long. Just shortly afterwards, we had a break of structure. And then we had a sell move. So ensure that before you trade a breakout, there must be a retest. Okay, do not just jump in. Let the price retest and continue in the direction of the breakout before you enter. And then focus on market structure and volume. Okay, only enter when volume confirms the move. Let there be an increase in volume. That's why you should use your volumes indicator. Look at price action. Okay, strong momentum candles. Look out for strong momentum candles as well, because that means that a real trend is forming. And then finally, avoid over trading. If the market is consolidating, do not force trades. All right, do not force trades in a consolidation market. Be patient and wait for high probability setups. So there you have it. Now you know how to avoid consolidating markets and improve your rate of success by trading only when the market is in your favor. All right, remember, successful trading is not about taking more trades, it's about taking better trades. If you found this video helpful, do me a favor. If you found this video helpful, okay, do me a favor and hit that like button and subscribe for more expert trading tips. And don't forget to turn on notifications so you never miss a new upload. In the meantime, thank you for watching and happy trading.